Okay, welcome everybody. I'm Babak Abbassadeh, CEO of Toronto Center for Global Leadership in Financial Supervision, and today's moderator MC. Looks like we are oversubscribed. If you have a seat, don't worry. This is not the United Airlines. We're not going to kick you out. You won't get beat up. And if you're standing, a couple of the ministers will be leaving, and some of their staff, so there will be seats for you afterwards. So please bear with us. We're delighted to present this timely discussion on closing gender gap in finance as a contribution to women's economic improvement and to advance the UN 2030's SDGs. More than 1 billion women worldwide still have no access to the banking services necessary to save, borrow, insure themselves and their assets, and control their own money. But new developments in financial services, such as digital finance, are expanding access for poor and rural women who have not been included in traditional finance due to distances and cultural and gender biases. The challenge before this very distinguished panel is to discuss how our organizations and stakeholders can work together to eliminate the gaps in women's usage of financial services. While it is important to encourage technological innovations, it is also important to help countries adopt appropriate and proportionate regulatory and supervisory frameworks. Toronto Center's programs on microfinance, microinsurance, and digital finance help regulators and supervisors better understand how to enable sustainable growth of financial services, and we do this with a lot of partners, while ensuring that consumer protections and interests are promoted and protected. So we see closing gender gap as an important part of that work, which is aligned with our mission. And this in turn underpins sustainable economic growth and poverty reduction. Since our establishment in 1998, we have intensively trained more than 10,000 supervisors and regulators from around the world in both prudential, consumer protection, financial stability, and financial inclusion, and delivered about 70 training programs a year in the recent years. I'd like to proudly acknowledge Toronto Center's key sponsors, and they're represented by very senior representatives of their government, foremost governments of Canada and Sweden, but also the IMF and the World Bank. And also we thank the civil society for encouraging us and helping us make this happen. By way of introductions, I'm going to introduce the two ministers first. And then I'm going to ask Minister Andersson of Sweden to please come forward to deliver her remarks. As she goes back, I'll ask Minister Morneau to please come forward. I just want to make sure that we can keep the meeting moving. So now it's my pleasure to introduce the Swedish and Canadian finance ministers who will deliver opening remarks. The Honorable Magdalena Andersson has had a distinguished career in Parliament and has been the Finance Minister of Sweden since 2014. She studied at prestigious European universities in Vienna and Stockholm, as well as Harvard University, and obtained advanced degrees in economics and business administration. She is part of the world's, now listen to this, first explicitly feminist government, and has introduced gender budgeting as a tool to promote gender equality. The Honorable Bill Morneau is Canada's distinguished finance minister. Previously, he led Morneau-Chapelle and was pension investment advisor to Ontario's finance minister. Mr. Morneau's community service in Toronto is extensive, notable, having supported the arts, helped street kids, and improved access to healthcare and education. Internationally, he founded a school for Somali and Sudanese youth in an African refugee camp. He holds a BA from Western University, MSc from the London School of Economics, and an MBA from INSEAD. Both of these ministers are dedicated supporters of gender equality around the world. And so please help me enthusiastically welcome them both. Minister Andersson? Yes. And I have time cards, but I won't use them with the ministers. So it's an honor system with them. Right, go ahead.
So, Thank you, and thank you for the opportunity to have some opening remarks, and thank you very much for the introduction. And just as you said, the Swedish government has declared itself a feminist government, and well, you can't stop by just making a declaration. You also have to do the action. So, I mean, this really means a strong commitment to promote gender equality in all our policy, and have a gender equality perspective has to be applied in our work every day, in each decision, both nationally and internationally. And as a Minister of Finance, by promoting gender budgeting, I'm trying to have a gender perspective in all the decisions we're making in the ministry, by myself, but also by the employees. But promoting gender equality is also one of the priorities in Swedish international development cooperation. So, on this subject, let me start by saying that the importance of access to financial services cannot be overstated. For example, last year, the United Nations adopted a resolution that stresses that financial inclusion is a key tool for implementing the Sustainable Development Goals. And this is really on top of the agenda in the national community right now. And here, financial access is a necessary step in that direction. But it's also so that access to financial services is a key measure to facilitate women's integration into the workforce across the globe. And having more women in the workforce, I mean, it's just not the morally right thing to do. It's also smart economics. Just listen to this. In the McKinsey Global Gender Gap Report, a scenario in which women play an identical role to males in the labor market, that would actually increase annual GDP by $28 trillion or 26%. So there is a lot of potential here. The world could be much richer if women participated in the labor force. When it comes to access to financial services, I mean, a lot has happened during the last years. The World Bank's Global Findex shows that a significantly improved situation with 700 million more adults worldwide that have obtained access to financial services over the last 3 years. So, I mean, really things are happening in this area. But at the same time, according to the same database, approximately 2 billion women, notably women in poor countries, are left behind when it comes to financial services. So, of course, this must come to a change. But having access to financial services must go hand in hand with access to other key assets, such as education, land, housing, technology, but also improved inheritance laws, because all these things, of course, they work together in order to improve gender equality. I would like to give you one example, which comes from the World Bank's Women, Business and Law report from last year, where they studied 2 Hindu states, where in 1994 they reformed the Hindu Succession Act, allowing women and men the same rights to inherit joint family property. And this then obviously altered control over assets within the families. So what happened? Well, mothers who benefited from this reform, they spent twice as much on their daughters' education compared to other mothers. But moreover, where the reforms were implemented, women were more likely to have bank accounts, and their families were more likely to have sanitary latrines. So this suggests that this legal empowerment gives women more bargaining power within the household and leads to better educational, financial outcomes for the families. So inheritance laws, education, and financial access are obviously interconnected. Obviously, there are no quick fixes for achieving gender equality in access to financial services, but we can see a great potential in the more widespread use of mobile phones and other technological solutions which will increase access across the globe. But in order to get all the way, we also need to advance gender equality in other areas and increase gender equality in general. And from my perspective, I think really important tools in that work would be, number one, to have gender equality on the top national level, to have it as a top national priority for politicians. Number two is to have the frameworks, both the legal and regulatory framework that promote gender equality, and not only to put them in place, but also have them implemented. And then the third thing is that women and men, of course, should have equal access to education, influence, and capital. And these points would not only potentially close the gender gap in finance, they would actually also make the world much richer. and probably a better place. So just finally, let me thank the organizers for arranging this event. Sweden is a firm supporter and a financial contributor to the Toronto Centre, and we encourage you to continue your important work to promote global financial inclusion. Thank you very much.
May I now ask Minister Morneau to please take the floor?
Well, I'd like to start by thanking you, Babak, for asking me to be here today. It's a real pleasure. I have more than one occasion I've followed Magdalena in a discussion, and it's one of those things that you don't want to have to do that often because she's certainly a trailblazer, especially in this discussion. But I do have a trump card today. I'm actually the Member of Parliament for Toronto Centre in Canada. So that, I think, puts me in a unique position here to talk a little bit. I also was told that one of my predecessors as Minister of Finance in Canada, Paul Martin, was one of the founders of this organization. So it's obviously a pleasure to be here following Magdalena and in the footsteps of Paul Martin. We're here to talk about the gender gap in finance, and obviously, as Canada's Minister of Finance, this is a very important issue. Again, following after Magdalena, some have called us a feminist government, but I know that we need to make the efforts to really live up to that, and that is certainly something that we in our government aspire to do. So before we talk about the specific sector, I thought I would speak briefly on some of the things that we've done in Canada over the last 18 months, in particular some things that we think advance the cause of women in our country. Last month, I tabled our government's second budget. That included, in Canada, our first ever gender statement. It was meant to show how the measures that we're taking are informed by our goals to bring about greater gender equality. And it's an important first step in that, what we see as a very important long-term objective. It's about much more than symbolism. It's about acknowledging that the policies that we create, the policies that we put forward, impact men and women differently, and that needs to be considered in everything that we do. And it challenges us, we know, by taking that stance to make sure that we level the playing field, especially in places where inequalities in our country persist. So I guess thinking about it as a finance minister, looking at gender issues, I look at it typically from an economic lens, which I guess you'd understand. But I will say that in Canada we had a great opportunity last week. We had Malala come to Canada, and I had the opportunity to spend some time listening to her and meeting her and hearing her insights and seeing her poise. And it really does remind you of the impact that we can bring to young women and women's lives if we focus on education and we focus on creating opportunity. Our goal is really to work in our economy to make women feel empowered, and we see it as first and foremost a moral issue. It's as a starting point something we should be doing because we should be striving to make sure that all of us in our society are equal. And we know that Canadians want to be living in a country where everyone has a fair chance to succeed, irrespective of their background and certainly irrespective of their gender. So that is our frame as we go forward in everything, and it certainly helps underpin the economic argument for equality. We know that making women and girls feel empowered is really going to help us to build more leaders in our economy, and we recognize that what it will do, importantly in the long run, is make our economy stronger. Also, it'll make us just better. We've been making progress. In Canada, we have good success in having more and more women become educated, established in the workforce, and increasing incomes of both women and men. And we have, in our environment, we have Canadian women as a very educated group, making up 47% of our labor force. So that's all positive. But we recognize that there persist important challenges. In our country, women are still paid less than men, in some cases for exactly the same positions. And certainly that's the case in some of the places we're talking about today. Women are less present in some sectors, some important sectors, in particular in trades, something that we know we need to deal with. And they're overrepresented in other sectors, and in particular in lower paying occupations such as retail and service sectors. So these are huge challenges. Along with that, executive level positions are most often held by men. 47% of the workforce is women, but only 26% of the workforce in terms of the executive level positions are held by women in our country. Now, the financial sector in our country is a leader in implementing gender diversity on boards and senior management, has an average of 34% of women in these positions. This is positive, and this is a sector that's made some success, but it's far from emblematic in our society, and we know that we still have much to do. We know that younger women with at least one child are still far more likely than men to leave their careers to perform unpaid work at home or work fewer hours. And most troublingly, even in our country, women and girls are more likely than men to experience poverty, violence, and harassment. So we know as a government, and certainly as a government that wants to be a feminist government, that we need to do better. That means we got to begin by recognizing the government has a role to play in addressing these imbalances. So for us, many of the measures that we've put in place have been in attempts to tackling this inequality. Our child benefit for our country, compared to the previous system of child benefits, it provides more money for 9 out of 10 families, lifts hundreds of thousands of children out of poverty, and roughly 60% of the families receiving the maximum amount under our new child benefit are single mothers, so making an important difference for that group. And of the single mothers that receive the Canada Child Benefit, about 90% of them have net family incomes under $60,000 per year. These single parent families receive about $9,000 per year in child benefits on average, and those are tax-free. And obviously we know this can make an enormous difference in a young mother's life and the life of her kids. We, in our more recent budget, are pursuing major initiatives promoting more equal labor markets, trying to reduce poverty and violence affecting women and girls. We're building and supporting the kind of infrastructure, daycares, affordable housing, public transit that we would know will help women in particular to get more of what they need to succeed, whether it's helping them with childcare so they get to work, or especially for people that need public transit in cities just to get from point A to point B. We believe that we're making it easier for Canadians raising children to access student financial assistance to get them back to school, where in our country women make up the majority. So we know that our budget paved the way for some new actions that focus on innovative and inclusive and sustained growth for women. It includes investing in learning programs that will encourage more participation of women in STEM fields, where in our country they're currently underrepresented. We also, as I mentioned in our last budget, it was the first in our history, and following on the footsteps of what's happened in Sweden, to include a gender-based analysis process, which has helped to identify more than 60 measures that we put in place in our budget with particular gender impacts. And that's something that, as we move forward, we will be looking in every measure in order to see the impacts on women in our society. Our government asked the Canada-United States Council for Advancement of Women Entrepreneurs and Business Leaders to advise us on how we can better empower women entrepreneurs and remove barriers for women in business. Now, we know it's a start, but we also know that we need to do much more if we really want to make a difference. So where we've identified gaps in data or where analysis doesn't go deeply enough, we will continue to increase our capacity and expertise in our government. But we do know that these challenges are not static. Our economy is changing like never before. We know that we can do better, and we certainly hope that the discussion in the group here today can help us with ideas to advance that goal, drive us to greater fairness and equality, and a stronger economy that will have benefits that are shared by all, including, of course, those that are most challenged. So I really do hope that we hear some ideas from you. Thank you for having me here today, and I really appreciate the work that you're doing. Thanks very much.
So just for the media, the minister will be scrumming outside now because he has to go to another event, so yes. Sorry for the disruption.
If any seats are opening up, please feel free to grab them as soon as you can. Thank you again. And now it's my privilege to introduce someone who's particularly a very strong world leader in gender equality, Ms. Phumzile Mlambo Ngcuka. She's the under UN Secretary General and Executive Director of UN Women. She has served as Deputy President of South Africa from 2005 to 2008, before which she held various senior positions in ministries in Parliament, with a focus on human rights, equality, and social justice. Also, I'm glad to say, when I read her bio, I was very impressed. She played a very big role in the struggle against apartheid. So without any undue wait, please welcome.
Thank you very much. I want to start by apologizing that I'm not going to offer solutions. I'm just going to whinge. In this session, I think the solution makers are sitting over there. I think the biggest funding gap that exists in the world is unequal pay. Most tolerated, universal, even in countries that have both constitutions and a string of gender equality legislation and support system. And I think that just frames the problem that we have. The fact that women earn 23% less than their male counterparts for work of equal value. In many national governments, for approved programs that address gender equality presented to cabinets, women are most likely to get about 10% of the funds that they require to implement the program. The rest, they must go and bake cakes and see how they make up for the needs of the women who are always the majority of the poorest of the poor in every country. OECD in 2013, and I don't think it has changed dramatically, produced a report which showed that only 2% of funds, for instance, that go for gender equality are reserved for women's economic empowerment, which provides us the biggest hope for integrating women meaningfully in the economy and for changing the world. And we heard from the Minister of Sweden how much the world would change if women were significantly economically empowered. And the fact that we're not investing in the process to get there, I think says a lot about how we value women. Women in women, peace and security space are still struggling to get 15% of the funds available for women, peace and security to be dedicated to programs that address women. That is despite the fact that we know that about 70% of people affected in war and conflict are women and children. We have the same challenge when it comes into resources available for humanitarian services. We find that it is easier for investors in development to invest in institutions that are gender diverse or led by men than it is to invest in feminist organizations at a local level, at a national level, and at an international level. I think we're dealing here with a lot of stereotypes about women and their capacity to either handle money or use money. I think there's almost like a dichotomy. Women and money separate. Women and power separate. Women and poverty together. So the same stereotypes that we complain about, I think broadly in society, we have to address within the development movement. And we have to change the paradigm because the development movement has done so much and continues to do a lot to change the attitudes about and towards women. This is one area where we're still lagging behind, and hey, money talks. If we cannot change our attitudes in relation to funding and finance, all of the other exceptionally good things that the sector does, that donors does, that philanthropists do, that women's civil society, etc., that all of us do, is not going to give us the results that we want. And I think we need data We need investments that will demonstrate what it is that we're missing by not investing in women adequately. Sorry for whinging.
Oh, well, very good. Thank you. Thank you very much. That was, sorry. Thank you very much. That was quite an impressive opening with great comments from the ministers and Madam UN Undersecretary. I think we're going to start the panel discussion. This is a very interesting group of people, all experts in their field. Sorry about my little table. I feel like Austin Powers sitting here, but I'll try to deal with that a little bit. We're going to go from that end to this end. You all have the bios of the speakers with you. Those of you who had registered ahead of time, we emailed them to you in the interest of time, and also to be able to get to your questions. I'm not going to read their lengthy bios, but as I ask them questions, I try to make some reference to their backgrounds. I hope that's okay with them as well. So, Chela, you're very important to us. You're a member of our board of directors and a very senior member of the World Bank Group, head of Finance and Markets Global Practice. I think there's only 13 or so global practices there. Have worked a lot in supervision, done a lot of FSAPs, and your bailiwick includes not only financial stability, but also financial inclusion and issues of that nature. So I guess the question that I rehearsed for you was, from your perspective, what are the opportunities and challenges for regulators and supervisors in closing the gender gap in finance? And if you can, as you answer that question, also talk about how does women's empowerment contribute in turn to inclusive and stable financial systems? Because that's also very important for our work and other partners that we work with in the area of financial inclusion. Thank you.
Thank you, Babak. Thank you for being here. It's a real pleasure to talk to you about this very important topic. Good afternoon, everyone. When I looked at the title of the conference, Closing the Gap in Finance, three issues came to my mind. One was, is this closing the gap in terms of participation of women in financial institutions, be it banks, hedge funds, whatever financial institutions, as operational staff, management, or boards, and so on? And when I look at the data, it's not very impressive. Less than 10% of all U.S. fund managers are women, and a handful of women are CEOs in the financial sector, and in many of the boards, you don't see many women, except, I guess, in Canada and some of the Nordic countries. And I always remember what the managing director of the IMF once said. She said, I wonder how it would be if it was Lehman Sisters. So that's the first one, participation of women in financial institutions. The second one is participation of women in regulating and supervising the financial sector. And when you look at that, it's also quite pathetic. Only very few female participants as regulators. When I sit at the FS Financial Stability Board plenary, there are 50 members, only 4 women. One is Canadian and the other one is Swedish, and the rest are mainly. But there is a silver lining. We do, as women, we do much better when it comes to cleaning up of the banking system. So you can see examples recently in Ukraine, the single supervisory mechanism in Europe, and in my own country, in Turkey. Last but not least, the other gap, and which I'm going to focus on because this is really a key mandate of the World Bank, is access and use of financial services by women. And the mandate of the World Bank to end extreme poverty, this actually really fits on this issue. I'm not going to go into the figures because the minister already talked about them. 1.1 billion women unbanked. It's a colossal number, and I haven't done it, so I can give credit and be proud of the World Bank Global Findex, which really has put a lot of effort in mining the data and putting these numbers out in the open. So if you look at the gender gap, it's 9 percentage points difference between men and women's access on average, and in some countries like India that goes all the way up to 20%. So women are 20%, only 20% of women likely to get access to financial services. Why should regulators and supervisors care? Because I have been a regulator in my previous career, and you care about the prudent and stability of the financial system. You want a well-functioning financial system as a regulator. You don't really have financial inclusion as your mandate. But I think we have learned a very good lesson in the last few years that globalization with non-inclusive growth, these things end up with a backlash. And I think from that perspective, it's very important that we also have inclusive finance and that it's tailored and responsible, but it's inclusive. And not just because it's politically correct, but it's also sustainable and economically smart, as the minister said, and I'm sure Martin will talk to this about the contribution of women to the real economy. So what can regulators do to help financial inclusion? Three things I'm going to talk about. One, they can help remove legal and regulatory barriers for inclusion of women. There are many countries, emerging market countries, developing countries, where women cannot buy land or buy real estate. They have to get their husband's signature to be able to buy real estate. So there's a whole issue of really looking very carefully, and we have been doing that with the Findex and also in the global practice that I'm leading, in terms of these legal and regulatory barriers, access to movable collateral, access to financial services, and so on. How am I doing with time?
Very well.
Okay. Thank you. So increasing the ability of women to have register movable collateral, to have the access to credit bureau, to be able to use big data, which may collect information about women. All these issues are going to be very important in increasing the access of women to financial services. So really working hard, and this has to be coordinated at the highest levels, at the global level, in removing these legal and regulatory barriers. Second, enabling digital finance. That's very critical as well, because this is strengthening access to digital financial services through mobile phones and other forums can allow women to transfer money even though they live far from access points to a bank or any other institution that they can do business with in terms of financial services. This really not only helps women access the financial sector, but also gives them empowerment. And there are lots of evidence-based studies which show that they are able to educate their children, provide health care to their children. So it's actually very important in terms of bringing women these services by allowing digital financial access. Bangladesh, for example, there's a project that we have at the bank to pay garment workers with e-money, and this has been really critical in promoting financial independence. It also helps women manage risk, and women are usually good at managing risk, often in places where formal insurance is limited and there may be shocks to their income or their well-being. This was the case in Kenya, for example, with the use of M-Pesa in providing mobile money services, including insurance. Last but not least, they can improve information on the gender gap. We have to strengthen our knowledge, our information base, because without facts, it's very difficult to convince people. So we need to do more and more in terms of really strengthening our knowledge of what the facts are on the ground. And we at the bank have been working very closely with the UN Foundation on the Data 2X to sharpen the focus of gender at country level financial data. We are also in the middle of collecting information through the Global Findex, which provides also sex disaggregated financial sector data and demand-side information on financial inclusion. And we are very grateful to Bill and Melinda Gates Foundation for providing funding and guidance to us on both of these, which is a great segue to the next speaker, I think. Thank you.
Thank you very much, Sheila. You certainly set the bar high for concision and commentary, so that's great. Thank you. So Michael Wiegand is the Director of the Financial Services for the Poor Strategy at the Gates Foundation. He had a distinguished career in the private sector, Standard Chartered and McKinsey, so I guess there is hope for everybody. We can all come back and start doing good for the world. Michael, if I could ask you, why has your team prioritized women's financial inclusion? I understand you're doing some research in this area regarding women's customer journey. What are you, and digital financial services, what are you hoping to be able to get out of that? And related to all of that, the Gates Foundation has a few initiatives regarding investments that explore legal barriers, what Chela talked about. I wonder if you can talk a little bit about that. Yeah.
Sure. I mean, women are disproportionately excluded from financial services, and therefore the foundation has always had a goal to close the gender gap, not only as a moral imperative of equality that Minister Morneau mentioned, but simply we could not achieve our overall financial inclusion goals without closing the gender gap. But there's increasing evidence that financial inclusion can directly drive women's economic empowerment. Some of you may be familiar with a study by Suri and Professor Jack here at Georgetown. It was released in the journal Science in December. That showed that even basic digital payment accounts can disproportionately enable women to climb out of poverty, in part by enabling them to move into the formal economic sector. There's another study that we've helped fund by Rohini Panda at the Harvard Kennedy School that looks at some programs in India where government benefits are paid directly into women's digital accounts. And not only does that lead to more spending on the family and on girls in particular, but that agency is giving them empowerment, and we're seeing much greater movement again into the formal economy. And Minister Anderson pointed out earlier that women's participation in the workforce is a key driver of economic growth. So we see closing the gender gap actually having a direct line to economic development and economic growth. You asked about the work we funded in terms of understanding the customer journey for women in accessing financial services. Because we want to be gender intentional in the programs that we fund in order to accelerate the reduction in the gender gap, right? We don't want to just promote financial inclusion and hope that the rising tide will lift all boats. And this requires us and our partners to really understand the specific barriers to women's usage. And then beyond that, as we move from a gender gap reduction goal to women's economic empowerment, we can target specifically the aspects of financial service products that enable economic empowerment and enable women to move into the formal sector. So we're quite excited about that. One of the specific barriers that Minister Anderson mentioned and Chela mentioned as well are the legal barriers. There was already great work done by the World Bank Women's Business and Law Initiative. And we have funded sort of an add-on to that that's looked specifically at the barriers to financial inclusion. And it's really brought together whole new areas of regulation and law that were not specifically looked at in the previous work, but also as they move towards working with countries to solve this, they're bringing the regulators into the picture in addressing some of these legal gaps, and that's sort of I think bringing a new constituency to the overall effort around closing these legal barriers. And then finally, you talked about you mentioned data. The Gates Foundation has always believed passionately that a data-driven approach leads to more successful policy. We were a proud original funder of the Findex report. We fund some specific, that happens every 3 years, we fund some specific annual sort of additional reports in some of the larger countries. And we did, and I think that has been really valuable, and we commend the work that the World Bank has done in that area. It's really given a data fact base on in detailed breakdown of different aspects of financial inclusion. And then another piece that we're excited about that's new is something called Data 2X. Make sure I get that right. I always get these acronyms wrong. It actually lives in the UN Foundation, and that's really looking at big data, right? So looking at pulling data from a variety of sources in order to give us greater insights into gender. So we're excited about the opportunities to use that to drive women's economic empowerment.
So, thank you very much. In the moment when you were hesitating, I thought you were saying this data lives in the clouds. I'm going to change the order just a little bit for the flow of my thinking. Yannick, I'm wondering if I can pose the next question to you. Yannick Lemarek, you've had a distinguished career in the international bodies, and you also worked on climate change issues, and now you're working on a lot of the gender-related matters. And I was wondering if, from your perspective, what are the critical areas to support gender equality and women's empowerment worldwide, and where do we stand? And do you have any observations or advice for this group who are seized with the inner workings of the financial sector, whether it's this regulation or this deepening, and how to make their programs more effective? So from your perspective, after your executive director talked about this, what are you feeling? Things to add?
And I've better not to contradict my boss. Where do we stand? In a fairly difficult corner, in the sense that if you look at the latest issue of the Global Gender Gap Index compiled by the World Economic Forum, it will take about 170 years before we achieve gender equality and women empowerment. And so sometimes toward the end of the 22nd century, given that gender equality and women empowerment is a precondition for sustainable development, one can wonder whether we should rename the 2030 agenda the 2300 agenda. I would not recommend to do so because I don't think our planet can stomach 200 more years of the type of economic growth we have been having for the past 200 years. And so we really need to do something about it. The good news is that trends are not a fatality. Trends can be broken. They can be broken with political will, social mobilization, partnership, innovation. And so one of UN Women basically has been established to break trends when it comes to gender equality and women empowerment and to accelerate efforts. What do we believe are the key areas? I would say at least 4 key strategic impact areas. The first one is women political empowerment. The second one is women economic empowerment. The third one is elimination of violence against women. And the fourth one is women engagement in peace, security, and humanitarian action. The 4 are intimately interlinked in the sense that violence against women is both a consequence and a cause of lack of political empowerment, lack of economic empowerment, and vulnerability to crisis and conflicts. And so we could spend the entire day phosphoring about how do we promote financial inclusion, how do we promote women entrepreneurship. If a woman cannot get out of her house without being harassed, nothing is to happen. All your economic policies will be inefficient. Same thing if she's being harassed as soon as she goes to a workplace. So it's very important, like said Minister Anderson, when we look at financial inclusion, women economic empowerment, to look at the big picture. Now, in terms of women economic empowerment, what is the fundamental cause of the lack of economic empowerment? It's the gender gap in terms of access to productive assets such as land, access to information, access to technology, access to finance, access to market, access to time. And this has severe consequences when we speak about economic policies and investment promotion policies. And for me, my first recommendation in terms of what should we do in terms of financial inclusion is to conduct a gender analysis of every single economic and investment promotion policy. Because it's in terms of macroeconomic policies that basically close child care centers because of austerity, de facto will increase the unpaid domestic and care burden of women, will reduce their capacity to generate income, will reduce their capacity to be financially included. In terms of investment policy, most of the investment policy basically try to improve the risk-reward profile of investment. But you can spend as much time as you want in terms of improving your investment profile. If a woman cannot get access to money, to upfront capital to invest, nothing is to happen. So my first recommendation would be, do not believe that your policies are gender neutral. Every single policy, including macroeconomic policy, will have a gender differentiated impact. If efficiency and effectiveness are important to you as decision makers, conduct a gender analysis of your policies. Now, I had 5 other points, and actually I should be able to remain within my 4 minutes because a lot of these points have already been very frequently mentioned. The second thing, once you have done your gender analysis of your policies, is remove the discriminatory policies before even you spend time trying to come up with supportive policies. And as mentioned by Sela, there are plenty of policies that discriminate, intentionally or unintentionally. One of my favorite ones is that in 18 countries, a woman needs the authorization of her husband before she can work. And if she does not have a husband, she cannot work. We have discussed at length about digital solution, fintech. Fintech is definitely a game changer. That's one of these innovation that can break trends. And indeed, mobile payment, M-Pesa, as mentioned already, has enabled hundreds of thousands of people in Kenya to have access to a financial electronic payment. You have, in addition to mobile payment, you have also blockchain technology that potentially is extremely powerful. So it's important for the regulator to encourage digital payment, not to constrain them. And in a lot of regard, M-Pesa could basically develop this business model because the regulator in Kenya did not do anything to stop it. In terms of promoting digital payment, in addition to e-salary payment, we can also think in terms of, for example, social security payment. One of the main reasons why you open a bank account is when you receive money. And so if every single country that has a social security system were to systematically transfer the money to a bank account for women, first, you reduce the risk of corruption, you reduce your transaction costs, you increase your financial inclusion. I keep going on because this has already been very well done, very well said. There are other policies, for example, which are game changers. One is procurement. $15 to $25 trillion of our economy, so up to 1/3 of our economy, one way or another one, goes through a procurement process. Right now, women entrepreneurs benefit from less than 1% of the public procurement. And if we could simply come with a law that says 10% of the procurement of every single public administration must be sourced from women-owned enterprises, you totally change the situation. And if I'm a banker, suddenly banking women become an irresistible value proposition. I don't need any legislation to tell me to do it. My bottom line tells me to do it. Something that has been mentioned is data. The only way we will basically leave no one behind is going beyond averages. We need this data, and we need to coordinate action across all the data providers. It would be wonderful to have a portal that provides every single information you can think about when it comes to gender equality and women empowerment. My last point that has been also unfortunately mentioned and not being very original, it's diversity. Diversity is good. It's very, very good. Diversity basically is you have a broader pool of views and opinion and knowledge to draw from, and diversity is particularly good when it comes to financial inclusion, because you can design financial products that are appropriate for the cash flow profiles of different women-owned businesses. They are not the same financial products, and the only way for us to develop to promote the development of I would say gender differentiated financial products is to have more women in the banking system. And right now, the industry has one of the worst track records. I think it's worse than energy, if my memory is correct. But here again, it's not a fatality. We know, for example, that the Enad bank in Ethiopia has 64% of its director women. I stop here.
Great. Well, thank you very much. Yeah, this group is good. There's no timekeeper needed for this group, so that's great. Thank you again. And Martin, I'd like to pose my comments to you. Martin Chihak, he's had a pretty extensive experience at the World Bank and now at the IMF, and also a big word of thanks to to Martin because he helped us in the initial design stages of this panel discussion. Martin, you are becoming an expert, and well, you are an expert, but you're becoming a recognized expert in financial inclusion. And I guess the question I want to pose to you is, how do you think financial inclusion can help achieve macroeconomic goals? We've heard about that from Yannick a little bit. And are there any challenges regarding financial stability, and how can these challenges be overcome? Because at the end of the day, we need to be able to also look at it from the broad macro level.
Thanks a lot, and thanks again to Toronto Centre for taking leadership on this. And if you think the room is too small, you can blame IMF for the organization. So indeed, it's an important question for us. When we take on new topics, we are asked to look at, are they macro critical? So what we spent last couple of years looking at, is there macro evidence? I mean, there's no doubt there are moral reasons. There's no doubt there's decent evidence from micro studies and randomized experiments, but is there macro evidence for this? And there are some issues on data. I'll get to that. But we did find in two studies we published where we looked at the effects on growth. There's an obvious effect on GDP growth. The exact size varies on a number of things, but it's about 2 to 3 percentage points on GDP growth. More related to the gender aspect, we found a strong link with income inequality. So I think that was, again, that's where the evidence was quite strong. Where it gets somewhat more confusing maybe for financial stability, and that's an important area where we look at. There overall we find that, of course, there's an issue when credit gets spread out too quickly. But there the issue is really, do you have good quality of supervision in the country? Is there good regulation and supervision? And unfortunately, the countries where they have the biggest gaps also are countries that tend to have relatively weak supervision. So I think that's where the activities of Toronto centers and others are super helpful. But again, and I'm following up on the quip that Chela mentioned, that our MD at one point said that if Lehman Brothers were Lehman Sisters, what would happen? Well, we did compile data with colleagues on the CEOs of banks and on the shares of supervisors. And what we tried to then look at are measures of stability in the banks. And we also looked at, when we send our experts into the field, what do they tell us about quality of supervision in those countries as part of our assessments? And we found no difference. So we didn't, I mean, for those of you who think women are innately better bankers, we didn't find strong evidence for that. But we didn't find reasons to say that they are worse bankers or worse supervisors. In fact, there's some evidence that having this diversity of view on the boards is quite helpful. So there's no reason to have this huge gap. In our data, we had about 5% of CEOs were women, and about 20% of supervisors were top supervisors were women. So again, it's big disparity, much bigger than for the users. And that brings me to the other data. So we keep talking about this 9 percentage point gap and the 1.1 billion, and that's all great, and it comes from the Findex data, and it's super important. But it's all from the user side. You ask 1,000 people in a country, it's been done twice. So we really have still a major gap in our understanding of this gap, and it's the understanding of the data. So in some countries they have decent administrative data, but overall globally it's very hard to find comprehensive data. The IMF has been compiling for the last 12 years now the Financial Access Survey, which you can find on our website. And up to now, actually up to this month, it has 0 on the gender decomposition. But I'm happy to say that as part of the broader effort of IMF to compile gender decomposed data, we have now a pilot of the gender decomposed data from the provider side. So if you go on the website, you can find a report. And it's a mix of good and bad news. I think that the good news is that for these pilot countries, it's 28 countries, we have data, and we can say about 2/5 of accounts are owned by women, and it's a bit lower when it comes to usage. So again, women, the gap is bigger for users, and it's bigger when it comes to CEOs. So you can for SME owners. So we have some more data and evidence, and this is on annual basis. So it gives us some more ammunition on the data side. But we find that in most countries it's hard to compile this data. It just doesn't exist. It doesn't exist sometimes for technical reasons, sometimes for legal reasons, data confidentiality. Sometimes it is for reasons of just lack of resources. And I think those are the cases where you say, well, these countries have national inclusion strategies. Why is it so difficult to compile data decomposed by gender? So again, my plea here would be to for individual countries to follow the examples of Canada and Sweden and others, and actually work with the IMF on compiling this kind of decomposed data, because without the data we are flying blind, and we have some estimates and rough numbers, but it's hard. And so what are we doing next? Our focus really is on the country engagement. That for us is what we call Article 4 when we meet with ministers, central bank governors. So the idea is really to elevate this discussion at the level of when we talk at monetary and fiscal policy, and have a discussion on what are the structural impediments. So again, that's what we see as our, and what we started doing sort of these pilots of countries where we look at gender as a kind of macro relevant issue. It's a break from the past. Historically it was seen as a kind of social issue and something that's not really for us to look at as a macro issue. But it's hard to do if you don't have decent data. It's hard to do. We have some rough estimates, but we don't for most countries we don't have gender decomposed data.
So all for data, no alternative facts, right? So thank you, Martin, and thanks for your concrete calls for action. I should also mention that Martin is part of the MCM at the IMF, and both IMF and the World Bank have board members on Toronto Centre. So again, thanks for being here. So Mary Ellen, we kept you for last. Best, not best, but I mean everybody's best, but you are best for last. I noticed that you had actually, you're the president and CEO of Women's World Banking, but you also worked at Lehman Brothers. So my question to you is, would the crisis have been averted if there were Lehman sisters? No, that's not the question, but I can't resist asking that at some other time. I guess the question I want to ask you is, you work with financial service providers around the globe, and you heard the opinion of everybody around the table. In your view, what type of solutions are actually showing most promise? What's actually working in addressing women's needs, and any suggestions that you might have?
Babak, thank you very much. And I think my view on the Lehman Brothers thing is that if it were Lehman Brothers and sisters, I think we really very, very much would have seen a different outcome. It's been really wonderful listening to this, in some ways, the creation of the perfect world. And so many of the things that were raised by my esteemed colleagues on the panel, if they were in place, in the places that we're all so eager to close the gap, we would have, we'd make a very, very, really make a long distance and go a long distance in closing the gap. The one thing that wasn't said, and I'd say it's probably the thing we find at Women's World Banking that makes or breaks a product and whether it's actually going to be used by women, is by asking the women and finding out what the pain point, what the difficulty in their life, in their work, in their approach to in filling the needs of their family and their community, and then and only then looking at how a financial solution might work. And just sort of in broad terms, recognizing the 4-minute limit, I'd say what the 3 things we hear most consistently from women is, and every woman in this room knows this, that they are time-starved. And so anything you can do to make it easier, more convenient, more accessible, to get a product to a woman, to bring the product to the woman. Also, so many of the women that we're working with are in the informal sector, and they'll just say, every minute I take away from my fruit stall and have to go online to stand to deposit in a bank is money out of my pocket. It's sales that I'm not making. So convenience, hugely important. Second is a sort of complicated set of issues around security. So first of all, there's that very, very important issue of personal security and how truly at risk women are by carrying around a lot of cash, and so many of the transactions in their lives are still in cash. But there's also this sense, and so many of the women we talk to, the thing that actually drives them from the informal financial sector to the formal financial sector is the prospect of a safe place to save their money. That's not the mattress, and that is going to be safe. And very entangled into that is also an issue of trust. Women will take longer to feel a measure of trust with their financial institution, but we do know those institutions that capture a woman's trust will really have a client for life if they don't do anything to betray that trust. There's a great deal of evidence both in developed and developing countries that women are very, very loyal customers of financial institutions. They are far likely to buy cross-sold products of financial institutions, and so they're good clients. There is a business case for financial institutions to be banking them and to be taking that extra time to build that trust. And then the last thing I think is so important that we hear again and again, and also it's a developed country issue. It's the issue of confidentiality. When a woman has savings, she doesn't necessarily want her husband, her sons, her brothers, her neighbors to know that she is saving and what she's saving for. And so we see this particularly around asset building products. So when I hear those three things or those three elements, it just seems that technology is so well suited. Digital technology fits all three of those criteria so well. And so we at Women's World Banking now are really only working with digital financial solutions in lots of different ways, but every solution that we're working with banks, with mobile network operators, with insurance companies, all have a digital aspect. But again, there's sort of a cautionary part of that. We've heard a lot about the Findex data, that 700 million additional accounts that were opened from 2011 to 2014. About half of those were in India. But in India, you saw a really quite dismal gender gap of 18% expand to 20% because so much of that additional access was digital, and women still have much less access to the technology itself. So it's not just a question of giving the handsets, although there are 250 million fewer handsets owned by women than by men, but issues of financial literacy, which were always problematic for women, now have digital literacy added to them. So again, as we're thinking of digital solutions, we're making sure that literacy, that level of comfort using the technology is built in. And we know in, say, a country like Tanzania, which is sort of leapfrogged everywhere else, it's the only truly interoperable digital financial system in the developing world, we've seen parity now with women and men's take-up of digital products because the women have gotten that level of comfort. And then I just would like to just chime in for a moment on the regulation side, because I think so many of the really wonderful things that were mentioned here, we're very excited about seeing regulators go move in that direction. Certainly women have been tremendous beneficiaries of the tiered KYC, know your customer requirements, because issues of identity have just plagued women's financial access. In Bangladesh prior to this just last June, you had to have a birth certificate in order to get a SIM card for your phone. And girls' births are not registered for the most part. So just like literally right out of the gate, you're sort of held back from that great opportunity of financial access. We're equally excited about fintech solutions, alternative credit scoring. We're so hopeful that that's going to be able to sort of get around issues of collateral and lack of more traditional credit data. Equally, very excited about the movable collateral registries that are springing up. So I'm so thrilled that the World Bank has been piloting that. But I'd also come back, and I was fascinated by the remarks about the quality of women regulators and versus men regulators. We now have in Africa a real critical mass of women deputy governors of central banks. And they have come to us and very plainly said, how can my regulators look at a bank's ability to serve women clients and whether they are doing that well if they don't even understand the value of diversity in our own institutions? So we have a number of leadership development programs that we offer to financial service providers around the world, and we're now designing a product with some of those regulators through the Alliance for Financial Inclusion on the value of diversity at the regulatory level itself. So I think I'll stop there,
That's
but really exciting times.
Thank you very much. You made one comment that, oh, sorry, go ahead. Just grabbed my attention about trust, how if women don't have the trust in the system, they can't save. You know, those of us who have also experience in financial stability know all about that, run on the banks and everything. So that's one area where the two will converge. Also, Mary Ellen is a TED Talk star. If you haven't watched her TED Talk, please do. Actually, I watched it to get in shape for this session, and I highly recommend it. I just wanted to see, okay, I have a list of questions I wanted to ask, but I also want to give the floor to you. Won't be fair for me. Can I see if anybody has any questions? Please don't be shy. There's a smart audience there. We have an incredible resource here. If you don't ask questions, I'm going to call on you. So, randomly.
I'm not dodging the question.
Oh, yeah. Okay, sure. Yeah, that was pre-scheduled. That was planned. Yes. Go ahead, please. Could you introduce yourself and then ask your question?
Sure. Do I need to use this?
Yeah.
Hi, good afternoon. I'm
You can go
Alyssa.
incognito if you want.
Sure, no problem. Alyssa McCarter-Laborde from Global Communities and VTUS Group. And I saw Michael on a panel yesterday. You're on the DC circuit, I see. I have a question going back to the comment that Yannick made about procurement, you know, and requiring certain percentages. And I wanted to ask if any of you had seen specific incentives that central banks or regulators have been able to put in place that would encourage better services to women. And I work in the Middle East in financial inclusion, and the Central Bank of Lebanon for quite some time has had a certain allocation of reserves that banks can put towards the microfinance sector, and we've benefited from this substantially. You know, not necessarily targeted to women, but just getting incentives in place that would encourage the banking sector to pay attention to financial inclusion and to serve the lower end customer in different forms. So I just wondered, were there other things specifically that you've seen work that would put terms in a little bit more concrete ways for regulators to kind of push the envelope, right? Because it takes a lot of time, it seems. We've been talking about the gender gap for decades, right? And it's just a very slow-moving train. Thank you.
Would like to take that, Martin? Would you like to, or?
When it comes to procurement, actually the idea is to create a demand. If you're a banker and suddenly you have a $1.5 trillion market that has just emerged from nowhere, you will try to service it. So you do not only work on the supply, you work also on the demand. And so the cabinet can come up with a requirement for procurement, and you have a number of countries that have already passed a law requiring that a certain percentage of public procurement comes from women-owned enterprises. Like all the apparent silver bullets, it's not as simple as it sounds. In 4 minutes, I had to make it simple, but actually, for example, South Africa, the country from my boss, as one of the most progressive affirmative procurement policies, but it's not being utilized because basically women entrepreneurs do not have access to information, to productive assets, to technology, to finance in order to be able to capitalize on this market. So if you want to promote affirmative procurement, it will be important to make sure that it's part of an integrated package. None of this one is to work in isolation. Regarding your second point about basically central bank coming up with this kind of regulation, procurement will not be normally their role. But there is something called directed lending, where, for example, in India they were requiring that 15%, I think, of the loan portfolio would be for SMEs. The history of directed lending is very, very uneven, and maybe there I give the floor to IMF. But by and large, one has to be very careful with directed lending.
Any comments, Martin?
I agree on the last comment. I think we've generally, it's very hard to find sort of consistent evidence that it has worked. I just wanted to remark on the previous point. It's true when we did the survey of supervisors, and in Africa, the ratio is much higher. So I mentioned overall it's about 20%. In Africa, it's about 30% when you look at senior supervisors. So there's something there that may have to do with relative wages and other inducements. But I think we totally agree with this idea that there's there's a certain trade-off between stability and inclusion, and I think it's you cannot sort of try to solve that trade-off by actively promoting industries. I mean, we haven't found strong evidence for that.
Sorry, you want to mix? Yeah, go ahead.
Just a little bit of a pet peeve on this topic, that I think women are very often subject to sort of an unconscious bias sometimes in financial services. When you mentioned the South African bank, it came to mind. South African bank with a really, really good program for risk sharing between corporates who wanted to have SMEs in their supply chains. And so the corporates were providing some risk sharing to the bank. The bank was lending to the SMEs. It was a real win proposition. So I said, well, what about women-owned businesses? How many of them are you financing? And he just looked at me without any malice or anything. But he said, oh, if it's a woman's business, we just send her to the microfinance institution. And so I do think we have to remember that there are women who are running significantly larger businesses than microfinance.
I mean, on a tangential point, I'd like to add, we at Toronto Centre, we train 2,000 financial sector regulators and supervisors around the world on an annual basis. And in recent years, the number of women that we've been training are actually about 44%. So it's really rising. And many of them are going through fast track, and the level of interest is extremely rewarding and strong. We have time for one more. Sorry, go ahead.
Lynn, and I'm a student at Georgetown University. So this is really a question for all the panelists. And the first one is, personally, do you all believe in equal pay for equal work? And secondly, how has that been achieved in your respective organizations? And even if it has not, how do you make sure that women are recognized and rewarded for the same position that they work as men do? Thank you.
I think I'm privileged to work at an organization that's extremely progressive and is very active in promoting equality in pay, and we monitor it closely, and enabling one-year parental leave and so forth to enable both men and women to contribute to the family and to their careers. But it's a little easier when you've got a sort of single shareholder to drive that.
I think that people already quoted the comments from our managing director. So it's high on our agenda. If you look at the global policy agenda, again, this issue keeps coming up, and it's certainly high in terms of our internal staffing Of course, if you look at the country representatives, then there is much bigger skew. We have many more men in our executive board.
UN Women just launched a major campaign for equal pay, equal work.
Well, at Women's World Banking, our diversity issue is actually the other way around. And so we do very, very much value equal pay for equal work and the diversity of our work staff, of our staff. So making sure that we always maintain at least 33% men in our in our organization, and that there is an equality of pay is really important to us, and we've achieved it so far.
Policy, gender equity. Sorry, one more question and then, yeah, go ahead, please. Yeah.
Hi, I'm Thea from New Rules for Global Finance, and I'm kind of touching on the topic of trust that was mentioned earlier. How often do your organizations or countries that you've worked with contacted CSOs or other NGOs within the countries that you're trying to get equal or reduce the gender gap in, to use that trust to get more women into the banks and more women into those sectors?
Anyone want to take that?
I mean, the foundation works very closely with local partners, but we don't really directly interact with the local banks to try to influence them. So, yeah, I can sort of outside.
UN Women is a bit an outlier in the UN system, in the sense that we work first and foremost with civil society organization, and another advocacy campaign of us is about localization of services, localization of humanitarian assistance, localizations of development assistance. So for us, it's very, very important.
Thanks. Okay, so I've been looking this way. I realize there's a question here, so I'll take it, and then I have a very special guest I'd like to introduce. Go ahead, please.
Okay, thank you. I was wondering about asset ownership, what the inclusion of women in the finance sector can do for asset ownership. This week we had the talk about, of the CEO of Paga, who is a Nigerian company that provides mobile financial services, and he was mentioning that there are these checks that the women can know how their savings accounts are, and that they actually leave with the agents, so they don't bring back home, so nobody knows that she's actually saving. And I was maybe thinking that maybe this is the first time they're building an asset. So I was thinking about asset ownership and the financial inclusion. I'd like to know your opinion about it. Thank you.
Certainly in the digital space, that's something that we've seen, right? That women having an account on a mobile phone, it's easier for them to maintain privacy and secrecy around that. When you first mentioned asset ownership, I think a big area for women's economic empowerment is hard asset ownership, land title, and so forth. And I think the Women's Business Law Center is doing a lot of work in that, and it's something that's I think will be part of the Gates Foundation Women Economic Empowerment Initiative, and that's very important and very powerful.
Just one thing that we've gotten very excited about is mobile technology has sprung so many different business models, and there's been so much that's generated from that you've now seen in some of the pay-as-you-go solar generator businesses, that the families, often women-headed households, own the asset after a series of payments, and that some of those pay-as-you-go organizers, such as operations such as M-KOPA, that works in Kenya, Tanzania, and Uganda, are now lending against that hard asset. They're reporting the pay-as-you-go information to the National Credit Bureau. So it's just so wonderful that an asset that was, built and organized around achieving one set of goals for the household is now creating an asset that can serve several other goals as well.
Great, thank you. At this point, I'd like to introduce a very special guest. Of course, the panel will need an applause, but please hold it. No, please hold your applause, please. No. It is my distinct honor and privilege to introduce Canada's Minister of International Development, Marie-Claude Bibeau. International development has been a stalwart supporter of Toronto Centre since day one in 1998 in its former iteration, CEDA, Department of Foreign Affairs, Trade and Development, and now Global Affairs Canada. Minister Bibeau was appointed as the Minister of International Development and La Francophonie by Prime Minister Justin Trudeau. Anyone heard of him? In October 2015. She has a mandate to refocus Canada's international assistance to help the poorest and most vulnerable people and support fragile states. Minister Bibeau is also calling for actions and programs geared to the education and empowerment of women and girls, whose rights she defends unfailingly. She places women and girls among the top of her political action priorities. Minister Bibeau heads up Canada's strategy for implementing the 2030 Agenda for SDGs at home and around the world. The minister currently has a seat in the high-level advisory group for Every Woman, Every Child, an initiative put in place by the UN Secretary General. She has a seat on the World Bank Group's Advisory Council on Gender and Development. And one time I was in Ottawa trying to listen to her on another session on climate change, and her opening remarks basically said, there are only three things that are important to me: women and girls, girls and women and girls. So I think we heard the message loud and clear. Minister, may I ask you to please join us? Yeah. And she will deliver our closing remarks. Yeah. Welcome. Thank you.
Thank you very much.
Welcome.
I've spent a lot of time with humanitarian workers in the last year, with development experts, and it's a great pleasure to be with financial experts today and to hear you speak about women, the importance of women empowerment, and it was a great pleasure to hear you, and actually you said most of what I wanted to say. And now when I summarize in 3 points what we've heard during our very important consultation last year, I say, oh, sorry, I took it for granted. I say human dignity, women empowerment, and building local capacities. But women and girls are always at the heart of it. So, as you have told us, if we are to ensure inclusive economic growth, we need to address the finance gap between men and women, and between rich and poor. We already know that women invest more in health, education, and family welfare than men do, and that this helps to build prosperity in families, communities, and nations. Everyone benefits when women are included, whether we are talking about health, peace processes, or finance. The discussion today has crystallized how important it is for women to be able to access financial services such as checking account or health insurance. We also know that governments need to strengthen their civil registration and national identity systems so that all citizens, women and men, girls and boys, have access to the same social, political, and economic opportunities. This means that women are able to claim the same business support services as men, have access to credit, can register their businesses as entrepreneurs in the formal economy. As women become more active in the formal economy, as their assets grow, financial service providers are realizing that they, too, are leaving significant wealth on the table by failing to cater the women clients. They also need to look at what role women play in their own organizations, as employees and as board members. Financial sector regulators and supervisors must look at how policies and procedures can either constrain or enable women's effective access to financial services. For instance, rules for opening new deposit accounts often entail requirements such as formal proof of identity and address, for which women, especially the poorest and most vulnerable, most marginalized, can find hard to meet. To overcome this challenge, researchers, NGOs, and development institutions should undertake more analysis of existing and new data. My colleague, Minister Morneau, talked to you earlier about Canada's domestic policy on gender equality. He talked about running a gender-based analysis of every new measures in federal budgets, and about the importance of ensuring that women have access to leadership positions in the financial services sector. Because when they do, good things happen. You may recall that during the global financial crisis, a woman was at the helm of Canada's regulatory body. Julie Dixon, the superintendent of financial institutions, and until recently a board member of the Toronto Centre, helped lead Canada through the worst financial situation since the Great Depression. I'm proud to say that empowering women and girls and advancing gender equality is at the heart of Canada's new international assistance policy, which we will be launching in the coming weeks. Canada recognizes that women are the single most powerful driver for global sustainable economic growth and poverty reduction. And as the UN High-Level Panel on Women's Economic Empowerment has said, empowering women economically is not only the right thing to do to honor the world's commitment to human rights, it's the smart thing to do. The evidence are overwhelming that when women are involved in corporate governance, companies perform better. Diversity and inclusion is good for economic growth, and it is good for sustainable development. This is the case everywhere, both in Canada and in developing countries. Despite the opportunity women represent for financial institutions, we know that worldwide, only 58% of them had an account in 2014, compared to 65% for men. And this gap is greater in developing countries. We also know that women face legal and regulatory barriers to access financial services. When women can't inherit or own property, they have no assets to use as collateral for loans. Most of the roadblocks women face are simple and practical. A lack of money, lack of the necessary papers, or even their own lack of trust in financial institutions, because they are unfamiliar with them. That is why Canada is proud to support the Toronto Centre and the work it is doing to promote financial stability and improve access to financial services. This, in turn, contributes to improved economic growth, job creation, and poverty reduction. Finally, Canada recently announced $300 million towards a new development finance institution to mobilize investment in developing countries, advancing women's economic empowerment and reducing poverty in areas where alternative financing is scarce. We live in a world in which economic inequality seems to be increasing. The well-being and dignity of the world's poorest and most vulnerable people is being eroded, and not all communities have full access to finance. In such a world, we cannot overstate the importance of gender equality. This is why I'm so proud that Canada is working with all of you to promote gender equality and empowerment of women and girls. This is how we will build the more peaceful, more prosperous and inclusive world, the better world that the Sustainable Development Goals envision. Thank you.
So look at my microphone here. A big thank you to the minister. A big thank you to this fantastic panel. For us, I took notes, and we're going to be posting the webcast of this later. we learned a lot of things that we can actually apply in our various capacity building courses and work with our various partners around the world in these issues. So thank you again for everyone. Thanks to you for coming.